Disclaimer: the following report is for informational news purposes only and does not constitute legal, financial, medical, or official advice. All content here is presented as news and commentary, not as guidance. Do not take any anecdotal story or analysis as personal advice. July 4th, 2026, Fintech and Markets, Charting New Financial Frontiers. Corporate Treasury and Cash Flow Management. CFOs bet big on AI and digital cash to boost liquidity. In corporate finance circles, a quiet revolution is reshaping how companies manage their cash reserves. Chief financial officers, CFOs, have emerged from an era of near-zero interest rates into a new climate of higher yields that's making corporate cash strategic again. These days, cash flow management isn't just about safety and meeting payroll. It's about turning corporate cash piles into agile profit centers. Global e-commerce giants and retail conglomerates are doubling down on sophisticated treasury management tools and analytics, aiming to squeeze every drop of value from idle funds even as they keep enough liquidity on hand for sudden strategic moves. In short, companies are treating their cash reserves more like rocket fuel powering the next phase of growth. This transformation is fueled by technology and partnerships that were unthinkable a few years ago. In a headline-grabbing deal this week, New York Fintech Ramp announced a partnership with a startup called Moment, an AI-driven investment engine, to allow companies to automatically invest excess cash in high-yield bonds within their corporate finance workflows. Mid-sized businesses, not just megacorporations, can now deploy these tools to sweep spare cash into short-term investments in minutes, a task that used to take treasury teams weeks of manual coordination. Experts say such fintech innovation is democratizing advanced treasury and cash flow techniques, closing the gap between everyday corporate finance operations and the sophisticated tactics once limited to Wall Street. An industry task force of seasoned corporate treasurers also just published a blueprint for tokenized cash management, envisioning how blockchain-based digital currencies could soon be integrated into routine treasury operations for tasks like vendor payments and overnight investments. All these developments suggest that corporate finance is rapidly moving toward an era of real-time, always-on money movement. From a legal and compliance standpoint, corporate treasurers are proceeding carefully into the world of digital assets, encouraged by newly clarified regulations. A landmark stablecoin law passed last year eliminated many uncertainties around using digital currencies pegged to fiat money, essentially giving companies a green light to consider stablecoins as a legitimate liquidity tool. This regulatory clarity means CFOs can now explore holding stablecoins such as USDC for instant, low-cost cross-border transactions without as much fear of compliance backlash, as long as robust controls are in place. Banks and auditors are even expanding their services to help companies employ these digital dollars safely. Especially for e-commerce platforms dealing with thousands of international sellers, stablecoins offer near-instant 24/7 settlement and dramatically lower fees compared to traditional wire transfers, delivering new agility in global commerce. While prudent finance chiefs remain mindful of volatility and security, many see these digital currency innovations as an exciting new tool for real-time liquidity management and extra yield. In a turbulent global economy, and with commerce reaching ambitiously into new frontiers, corporate treasurers are adapting to ensure their companies have the financial fuel to sustain growth on this world and beyond. Enterprise Risk Management, ERM, from crisis to competitive advantage, threats as catalysts for resilience. Enterprise risk managers in 2026 confront a world of overlapping uncertainties and fast-evolving threats, but some companies are using these challenges to their advantage. The modern risk landscape includes everything from relentless cyber attacks on e-commerce platforms and sophisticated AI-driven fraud schemes to supply chain disruptions and climate-related disasters. Forward-looking businesses have responded by shifting risk management from a box-checking compliance function into a proactive strategy for resilience and competitive advantage. Today's ERM teams use powerful predictive analytics and artificial intelligence to model crises before they happen and stress test their defenses well in advance, ensuring continuity across global operations. Much like mission navigators charting a safe path through cosmic storms, risk leaders now continuously monitor a constellation of financial, technological, and geopolitical hazards in real time to protect company value and maintain trust among customers and investors. By viewing risk events not just as threats, but as opportunities to learn and improve, innovative companies are building an agile culture that can transform adversity into strength and even a competitive edge. New industry data are underscoring why this evolution in risk management is urgent. At a major European fintech conference last week, analysts revealed that global payment fraud rates have surged roughly 25% over the past year, highlighting how cybercriminals are exploiting shared digital infrastructure and deploying AI-powered scams to outpace old-school controls. In response, organizations are doubling down on next-generation risk solutions. Big banks and online retailers are rolling out AI tools that can spot subtle patterns signaling coordinated fraud rings, moving beyond static rule-based alerts to detect threats that previously slipped through unnoticed. Companies are also implementing integrated risk intelligence platforms that merge cyber alerts, financial exposures, and supply chain vulnerabilities into unified dashboards, giving executives a panoramic, real-time map of their corporate risk. What was once a backroom compliance task now functions as the central nervous system of the modern enterprise, instantly alerting leadership to anomalies and ensuring lightning-fast responses. In 2026, effective risk management means continuous, tech-enabled vigilance, and those that excel are being rewarded not only with fewer crises, but with investor confidence and market esteem for their stability. On the regulatory front, heightened scrutiny is making advanced risk management not just smart, but essential for legal compliance. Financial watchdogs around the world are signaling that companies must actively detect and mitigate risks or face serious consequences. The United Kingdom is enacting a new failure to prevent fraud law that holds companies legally accountable if they lack adequate fraud controls, effectively turning robust risk oversight into a must-have requirement. Likewise, regulators in the United States and across Asia have stepped up oversight of data protection, operational resiliency, and supply chain risk management, increasingly expecting firms to document their risk assessments and incident response plans. Enforcement actions are already driving the point home. Just days ago, an Australian regulator hit the local arm of a global bank with a multi-million-dollar fine for ignoring repeated scam transaction warnings, a stark reminder that lapses in risk oversight can translate to legal and financial disaster. This closer alignment of enterprise risk management with regulatory compliance highlights how central has become in protecting both corporate value and public trust. Businesses investing in strong risk and compliance systems today aren't just avoiding fines, they're positioning themselves as future-ready leaders in a world that prizes resilience. A mature risk culture now serves as a protective force field, empowering companies to boldly pursue opportunities, even in uncharted markets, with the confidence that their defenses are truly space-grade. B2B payments and infrastructure fintech. Big mergers fuel a race to build the global payments superhighway. The business-to-business, B2B, payments arena is crackling with activity as companies race to construct a seamless global payments network for the digital economy. In a blockbuster deal electrifying the fintech world, Nuvei, a Canadian payments processor, has agreed to acquire US-based Payoneer, a widely used cross-border payments platform for e-commerce merchants worldwide, for a hefty $2.75 billion. If regulators approve, this takeover would create a cross-border payments titan, positioned to serve the skyrocketing demand for real-time international transactions among businesses small and large. Meanwhile, European payments giant Adyen made headlines by striking a $335 million deal to buy a Silicon Valley startup specializing in AI-driven payment automation, aiming to supercharge its own platform with cutting-edge data analytics and speed. These mega deals highlight how leading payment companies are scaling up and layering in advanced tech to transform B2B transactions into an always-on, ultra-fast digital superhighway. As global commerce becomes even more digitized and interconnected, New technologies are emerging to meet businesses' appetite for instant, frictionless transactions. One rising star in this space is the stablecoin, a class of cryptocurrency tied to traditional currencies like the dollar, which promises to revolutionize cross-border business transfers. A stablecoin payment can settle within minutes at negligible cost, about 0.1% of the transaction's value, a staggering contrast to typical international remittance fees that often top 5 to 6%. This efficiency is driving real-world adoption. Companies in high-inflation economies from Latin America to Africa have reportedly processed billions in stablecoin payments, bypassing volatile local currencies and slashing bank fees when paying overseas suppliers or freelancers. Established players from Visa to emerging fintech startups are racing to integrate crypto wallet support and stablecoin rails into their payment systems, essentially laying down a 24/7 digital cash highway that parallels traditional banking routes. The push for innovation isn't just about speed or savings. It's about enabling a future of commerce where even small online sellers can transact across borders as smoothly as sending a text message. Regulators and policymakers worldwide are monitoring this rapid evolution in B2B finance to ensure the payment revolution stays on a safe track. In the European Union, lawmakers are moving forward with updated digital finance regulations, including an overhaul of payment services directives, aiming to foster cross-border fintech innovation under reinforced customer protections and anti-money laundering (AML) rules. U.S. regulators are likewise evaluating new oversight frameworks for stablecoin issuers to make sure that corporate use of these digital dollars is secure and fully backed, potentially paving the way for broader adoption in mainstream business. At the same time, central banks from China to India are rolling out or expanding instant payment systems and even piloting their own central bank digital currencies, CBDCs, to bring legacy financial infrastructure up to speed with the digital age. The hope among industry leaders is that smart, collaborative regulation can maximize the benefits of a borderless B2B payment ecosystem while minimizing risks. By working hand in hand with authorities, pioneers of this global payments superhighway are striving to make it not only fast and cost-effective, but also secure and legally sound. As the pace of commerce accelerates, possibly extending beyond our planet one day, today's B2B payment innovators are laying the groundwork for a world where money moves as freely as information, fueling growth for businesses across every frontier. RegTech, regulatory technology, AI fights fraud, compliance tech in a new high-stakes space race. In the high-pressure world of financial compliance, technology has become both a sword and a shield. The RegTech sector, where regulatory requirements meet innovation, is booming as companies face an endless wave of new rules and ever more cunning digital adversaries. Banks, fintechs, and e-commerce firms that handle millions of daily online transactions are embracing advanced compliance software to automate oversight, monitor for suspicious activity, and verify customer identities at scale. The stakes have never been higher, with rising cyber attacks, global money laundering networks, and strict privacy laws. Having effective RegTech solutions can be the difference between smooth operations and massive fines or reputational damage. But the challengers are adapting too. Sophisticated fraud rings now deploy deepfake identities and AI-generated schemes to slip past outdated verification processes, forcing compliance teams into a constant high-tech duel. There's a mounting sense that regulators and financial institutions are in a kind of digital space race against online criminals, both sides accelerating their tech, determined to outpace the other to keep financial systems safe. This week brought fresh evidence of the fierce competition in the RegTech arena as major players move to bolster their defenses with cutting-edge tools. Global consulting giant Accenture just unveiled a bold $4 billion investment plan to acquire multiple cybersecurity and analytics firms in a bid to strengthen the backbone of global financial infrastructure against surging cyber threats and ransomware attacks. In a related move, U.S.-based identity management provider SailPoint announced plans to purchase an Israeli startup specializing in AI-driven identity verification, underscoring the high importance of securing digital identities as more customer interactions and transactions take place online. These high-profile deals mirror a broader trend. Large corporations are rapidly snapping up RegTech startups to infuse their compliance operations with artificial intelligence, big data analytics, and advanced fraud detection features. The message ringing out from boardrooms is clear. As digital finance becomes instantaneous and borderless, regulatory technology must innovate at light speed to stay a step ahead of criminals, giving firms the tools to meet compliance mandates without smothering innovation. From a regulatory standpoint, governments and watchdog agencies are also turning to technology as they intensify the fight against financial misconduct. Enforcement authorities worldwide are setting stricter standards for corporate compliance and even launching their own high-tech initiatives. Some regulators in Asia and Europe are implementing real-time data reporting mandates that require companies to feed transaction data into AI-powered monitoring systems for rapid anomaly detection and response. In Australia, for instance, authorities recently fined a major bank tens of millions of dollars for failing to stop a spree of scam transactions, a stark demonstration that failing to modernize compliance can lead to heavy penalties and tarnished reputations. Meanwhile, officials from the United States to the European Union are urging financial institutions to adopt advanced tools, from automated risk scoring to continuous Know Your Customer (KYC) checks, to keep pace with evolving anti-money laundering (AML) and consumer protection laws, as well as upcoming AI governance standards. If done right, the convergence of legal mandates and innovative RegTech offers a hopeful vision. New digital compliance solutions can empower businesses to grow boldly and innovate in confidence while safeguarding customers and the broader financial ecosystem. In a world accelerating toward a hyper-digital future, effective compliance systems will be the navigation system keeping the rocket of progress on a safe trajectory, proof that with the right tech, we can reach for the stars without losing our way. Institutional trading and market infrastructure. High-speed markets embrace 24/7 trading in the race for new horizons. The world's trading systems are rapidly evolving as markets approach an era of near-constant activity and new digital asset classes. Major stock exchanges and trading venues across continents are upgrading their technology, pushing for faster settlement cycles and experimenting with extended trading hours to cater to an always-on global economy. In parts of Asia and the Middle East, several exchanges are actively piloting longer trading sessions and cross-border listings to meet the demands of investors who refuse to be bound by old-fashioned market schedules or national borders. Analysts predict that within a few years, leading markets might operate virtually around the clock, eliminating traditional gaps in trading hours much as satellites erase distance in telecommunications. Meanwhile, the mainstream adoption of cryptocurrencies and tokenized assets by institutional investors is pressing conventional market infrastructure to accommodate new forms of digital securities and 24/7 trading patterns. By embracing innovation, today's market operators are essentially building the financial equivalent of space-age highways, systems aimed at making access to capital markets as instantaneous, global, and continuous as the Internet itself. Several recent developments spotlight how swiftly this once slow-moving sector is adapting. In a cutting-edge milestone, a blockchain-based trading platform this week quietly executed one of the first large-scale institutional block trades of a tokenized asset, a sign of growing Wall Street interest in decentralized finance and on-chain trading infrastructure. Over in the Middle East, the Abu Dhabi Securities Exchange, ADX, just hosted its region's first cross-listing of a U.S. exchange-traded fund, offering local investors a window into an American ETF within their own market's trading hours. At the same time, high-frequency trading firms are pouring resources into more resilient, ultra-low latency networks and robust data pipelines after an industry survey revealed many algorithmic traders experienced processing slowdowns during recent surges in volume. Much like aerospace engineers fortifying a spacecraft to withstand extreme conditions, trading infrastructure teams are reinforcing their platforms to handle massive bursts of activity without sacrificing speed or stability. The overall trajectory is clear. Market infrastructure is leaving behind its analog past and rocketing into a high-tech future of better connectivity and unprecedented market reach. Market regulators are moving in step with these advancements to ensure that relentless financial innovation is matched by equally modern safeguards. U.S. regulators, including the Securities and Exchange Commission, SEC, and Commodity Futures Trading Commission, CFTC, have been signaling plans to coordinate on unified frameworks for digital asset trading and novel 24/7 trading venues. In Europe, updated rules under the Markets in Financial Instruments Directive, MiFID, and new crypto regulations aim to extend traditional investor protections and transparency requirements to emerging asset classes and continuous trading operations. Even the staid back-office apparatus is getting a futuristic overhaul. One successful pilot was conducted using a central bank digital currency to settle bond trades almost instantaneously via a blockchain ledger, hinting at a future where trades could be finalized in seconds rather than days. These initiatives show that regulators worldwide understand that the push towards always open, high-speed markets must come with robust guardrails to maintain stability and fairness. The hope among industry innovators and regulators alike is that an upgraded, inclusive financial ecosystem will soon take shape, one where markets never sleep, trades clear almost as quickly as they're executed, and opportunities reach investors around the globe, and perhaps, one day, beyond, seamlessly under prudent oversight. Disclaimer: this forward-looking deep-dive news report is intended for information and analysis only and is not legal, financial, medical, or official advice. All stories are provided as news commentary, and any anecdotal examples should not be construed as advice. Always consult qualified professionals for financial, legal, or medical guidance. Video description: in this forward-dated financial news roundup for July 4, 2026, we delve into 5 major fintech and market infrastructure stories dominating the headlines. From CFOs harnessing AI and stablecoins to optimize corporate cash flow management, to the evolution of enterprise risk management turning crises into opportunities, we explore how innovation is reshaping each sector. We also cover how massive B2B payment mergers are building an always-on global payments network, how cutting-edge RegTech and compliance technology are thwarting digital fraud in a modern-age space race, and how institutional trading infrastructure is pushing toward 24/7 markets and new frontiers. This comprehensive, optimistic news analysis takes a futurist yet grounded look at how technology, regulation, and human ingenuity are propelling the future of finance and e-commerce to new horizons. Video tags: Fintech, finance, financial news, corporate treasury, cash flow, risk management, enterprise risk, B2B payments, payments innovation, regulatory compliance, RegTech, cryptocurrency, stablecoins, digital assets, market infrastructure, stock market, AI and finance, future of finance, space economy, e-commerce. Base thumbnail concept: a dynamic split-screen image symbolizes the intersection of finance and technology. On one side, a busy stock exchange floor or a rising market graph. On the other, a futuristic digital grid or a rocket launch, evoking innovation and a bold, to-the-moon, optimism. The date, July 4, 2026, is featured prominently alongside a bold title like Fintech and Market News. The color scheme blends the confident blues of high finance with the black of space, reinforcing a forward-looking, cosmic frontier theme. Thumbnail variant A: corporate finance focus. A commanding CFO figure stands against a backdrop of digital currency symbols and upward trending charts. In the distance, a futuristic skyline or even a faint Earth from space image hints at global vision. The title highlights a phrase like future of corporate cash and the date, appealing to viewers intrigued by new cash management strategies. Thumbnail variant B: RegTech and risk angle. An image of a judge's gavel and a secure padlock is overlaid on a background of binary code or a digital globe, conveying a mix of legal oversight and cybersecurity. Bold text might read, AI versus fraud, new compliance era, or a similar arresting tagline. Strong contrasting colors, deep reds and blues or black and neon, add a sense of urgency and authority, emphasizing the high-stakes world of compliance. Thumbnail variant C: Trading and Markets theme. A global stock market display or candlestick chart is blended with a futuristic touch, perhaps a satellite orbiting Earth or a rocket shooting upward, symbolizing the push for 24/7 trading and exploration of new market frontiers. The title could say 24/7 Markets, Next Frontier with the date included. The design uses dramatic contrasts, for example, a dark cosmic background with vibrant green or orange text for the headline, to grab attention and highlight the thrilling race toward around-the-clock, borderless trading.